Hi, this is Steve Bray with this week's Cool Tools News Spool. Senators Johnson and Crapo last week released a long-awaited reform proposal for the housing finance system. The bill would eliminate Fannie and Freddie Mac and replace them with a mortgage insurance fund modeled in part on the FDIC, which backstops banks. The fund would be managed by a new independent regulator, the Federal Mortgage Insurance Corporation. Important aspects of the bill include: it provides an explicit government backstop for mortgages that requires that private investors absorb the first 10% of any loss. It is thought that this explicit backstop will assure the continued availability of long-term fixed-rate mortgage products. It specifies that mortgages must meet the underwriting standards of the Qualified Mortgage Rule and have a minimum down payment to be eligible for the fund. The Qualified Mortgage Rule does not specify a minimum down payment, but this bill requires 3.5% for first-time homebuyers and 5% for all others. It eliminates the affordable housing goals of Fannie and Freddie and replaces them with several affordable housing trust funds and incentives to provide credit to underserved communities. This last point probably sinks the reform proposal for now. A coalition of advocacy groups announced their opposition to the bill on Friday, and as a result, liberal Democrats in the Senate Banking Committee are likely to line up against it. The chances for the bill's passage already were slim given the recent profitability of Fannie and Freddie. Without strong support in the committee, it's unlikely Senate leaders will bring the bill to a vote given the risks of tackling this issue in an election year. That's Cool Tools for this week. Follow us on Facebook and our Texas Lone Star Lending website.